Good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where every morning in the UAE time, at least, I know it's a different time where everybody else is, but nonetheless, we take a time out to review where the markets are moving and where they're likely to go in the coming day. Clearly, this morning we wake up with a lot of the oil markets news, at least, dominated by the OPEC meeting yesterday, virtually held, in which they were doing an update on their output. Let's kick off in Sydney, Australia, with Peter McGuire, the CEO of XM Australia. Peter, what did you take away from yesterday's meeting, and how do you see it playing into the markets? Peter, I think your mute is on.
Pardon me. Sorry, Sean. Good morning to everyone, and greetings from Sydney. Yeah, what I took away was, first off, the markets had no great impact from what we heard because it's still flatlining at these sort of numbers. There's been nothing there to push it in either direction. So I think from the market's interpretation, there's nothing there to really hang our hats on. I was a little bit underwhelmed by the whole storyline, and I didn't walk away with anything really that convincing. I think there's a lot of issues ahead as far as OPEC and from a demand destruction component leading into 2021 with these COVID numbers that are ratcheting up, certainly across Europe and other parts of the world. So I think that OPEC will have a stronger look at the global situation come December, when we get 2 months down the line from where we currently sit, Sean.
Kevin Wright with Kepler in Asia, sitting in Singapore. Kevin, there was, although I completely concur with Peter, no real definitive sort of direction that one might take out of yesterday's meeting, at least for public consumption. But if you look at the coverage holistically, there was a lot of sort of repetitive language about concerned, outlook looks a little bit dodgy. There was generally bearish tone, one might say. What was your sense, Kevin?
Yeah, I think that question around demand is obviously still there. It overrides every consideration right now. At the same time, though, I think there's quite a lot of focus being given to compliance. Now, as you know, my firm looks at compliance from the OPEC members, OPEC Plus, on a very microscopic level almost, and compliance has been an issue, but it's actually become less of an issue over recent months, over July and August, when Nigeria and Iraq in particular started to comply much more strongly. So I was kind of surprised that there was a mention of compliance yesterday from the minister.
I mean, I suppose if you take that point, Kevin, ultimately it's a relatively bullish context, putting aside the wider market and the multiple of elements, but compliance with the output cuts committed to in September, 100%. What better can they do, I suppose, is this idea of the laggards bringing back extra cuts always seemed like a non-starter.
Yeah, and that's really my point, because, as I say, we've been tracking it since March, April time, when obviously there was the spat and the taps were opened. And subsequently, we saw compliance actually improve all the way through until August. So I was kind of surprised. I think that says to me that OPEC's members are behaving, and they're all complying with the overall strategy and direction of the group.
Mike McGlone, Senior Commodity Strategist, Bloomberg Intelligence. Mike in not New York, I was going to say that, in Connecticut, one train ride away from the big smoke. Mike, your takeaway from yesterday, the markets seem to have opened in Asia with not too much direction from it.
I agree with Peter and Kevin. It's impressive how boring crude oil has become. WTI locked in around 40, Brent 42, 43, below 45. And just we're all sitting here waiting for the next good topic to talk about. And obviously, OPEC has done a good job, I think, of supporting the market. Obviously, they like prices higher, but I think 50 is unusual, unlikely. And 30 is the risk. We all know it. And we just need to see what's going to be the next catalyst to get to 30. So for us, we're just 2 weeks away from the election. And people yesterday were saying OPEC supported the market, and then the stock market dropped later in the day and crude oil followed. So to me, that's what's happening now. It's all about the macro from a commodity standpoint. If we can sustain the stock market at these levels, and obviously OPEC can sustain its diligence, crude oil might stay at 40, but I think it's more likely to do what it's been doing since 2008 and trade down towards 30.
Mike, one of the stories in the digest this morning, which I thought seemed to, be somewhat, I don't know, counterintuitive, but at least somewhat tangible bullish, is 1 million air passengers in the US on Sunday. It seemed to catch me a little bit by surprise. A lot of people still getting on airplanes moving around America.
Well, it sounds great. But I look at, this time of year, I'm usually in London for conferences, and we're all doing our budget and everything, and no one can hop on an airplane. I can't even go to another state in this country because you'd have a 14-day quarantine. So it's obviously a sign in the right direction. But I think that's a key thing we all need to remember in this space. Even if there's a vaccine, everything's just going to take time. So come this time next year, hopefully we'll be much better off. I assume things will open up. Yes, air travel will open up, but getting back to where we were before, very unlikely. And every time we know that crude oil inches up, the supply is coming back on. So I'm not too optimistic about a quick recovery. In fact, now we've had the V, we're probably going to stabilize. And I think what's going to happen in 2 weeks, we're probably going to have a Democratic sweep. We're probably going to have higher taxes, more regulation. And, they may initially try to reduce U.S. supply, but there's going to be a massive push for clean energy in this country. And I look at myself. I've got an electric car, I've got solar panels, and that was done under subsidies 5-10 years ago. Looking forward to the next 5-10 years, we know where that trend's going. To a Democratic administration, crude oil is like coal.
Crude oil's like coal, yeah. Well, if you look at on the shale patch, just some tighter regulation on flaring could close in quite a few barrels. And I don't think you're going to have too many people disagreeing that flaring is just way past its sell-by date. Peter, China, a story in the digest this morning I thought was interesting that it's pointed towards that you can have recovery. China now pretty much back to pre-COVID levels on oil and energy consumption. If you get your management of COVID right, you can get your economy back and your energy consumption back to levels that were pre. What's your takeaway from that?
I could start it with a response like, as Jim Rogers used to say, can you believe the numbers? So let's assume we can believe the numbers, Sean. Yes, China has bounced back, and there's no disputing that, and it's probably that they'll keep on marching forward unless they have big breakouts with other states and other cities, and we have a rerun of a Wuhan. But I would hope that they don't. And unfortunately, there's many other parts of the world that are, and they're ratcheting up at incredible numbers. So the spotlight's on China at the moment. It's got the wind in its sails. And I think that growth will probably be maintained over 21 and probably into the first half of 22, a year and a half out from here. I think it's probably, reasonably good numbers leading forward. Where it runs from there, it's too hard to even contemplate.
Ultimately, at this point in time, Peter, the oil price stuck in the low 40s is good for Asia. Consuming Asia, the world's largest energy oil consuming country, China and others, these prices are actually like a tax cut, if you like.
They are a tax cut. And it's, I used to say that, years ago, it's the best thing for the purse and the wallet as far as that extra dollars in everyone's pocket every single day. The costs, I don't know what it is as far as Mike could be able to tell us what the price is at the gas tank in Connecticut. But, it's well down here in Australia compared to
it's making him wish he doesn't have an electric car, perhaps. I don't know.
Yeah, well, that's probably, there must be someone he knows that's still driving the old ones. But, the issue quite simply is that crude's, it's not a great trade at the moment, Sean. There's just all the heat's out of it, and there's nothing there to really attract a trader.
Kevin, in Singapore, and from the vantage point of Asia, where do you see the contango going and the whole storage play over the coming weeks?
Yeah, there's not a universal answer to that question because it depends on the market that you're looking at, right? So if you look at gasoline, for example, out here, we're actually quite backwards. There's nothing on floating storage anymore, and we're actually seeing demand in countries like India back to pre-COVID levels. And I was reading something just last week that was saying that consumption in September in India was 3% higher year on year. Now that to me is a bullish scenario, right? I mean, an awful lot of that is down to motorbike usage, but whatever it is, there's personal mobility and therefore there's consumption going on.
I mean, India is a kind of a sort of case in point of getting back to business regardless of infection rates. They seem to have moved beyond the, oh no, our hospitals are overwhelmed phase and just saying we're going back to full economic activity.
I don't think you'd find many governments around the world right now saying that they want to go into or can even afford to go into a second nationwide lockdown. And I think
except
India is
Ireland,
just an example
which
of
just
that.
did last night.
Well, but did Ireland have a first lockdown or was it more of a restriction?
No, they did. They had a pretty full lockdown in the spring. And the one difference between what was announced overnight and it's in the digest today is that schools are staying open. Whereas in the previous lockdown in the spring, schools were also shut.
Right. Fair point. But I think across the majority of the world, then let's call it, governments are very reluctant to go into second lockdown because of the economic damage. And I think there is growing evidence that we are getting better at treating this virus. People are starting to understand it more. Now, the vaccine is still a way away, but I think, overall the number of deaths that are occurring, the mortality rate is generally falling. So I think people have, and it's all relative, but have marginally more confidence in moving about and sort of trying to normalize to a certain extent. Now, I know that in certain countries there are localized lockdowns and so on, but I think there's a reluctance in most to go into national lockdowns and the restrictions that means.
Mike, the markets, obviously, the equity market seems to be continually moving or enjoying some elevation from the stimulus, not stimulus. The commodity markets less so. Is that not a big disconnect? And will that close that gap?
Well, I like what Peter said about attracting the trader. And as a commodity macro kind of person, crude oil doesn't have a lot of traction right now. We know what will attract people if it inches up near 50 or drops to near 30. But right now here, it's just no attraction for traders. But the traction for me is really in metals and ags and in the macro that there's a potential for a peak in the dollar. Now I mentioned the dollar, I use the trade weighted broad dollar. Obviously there's so many measures. And what's really been driving that dollar for the last 10 years is the US stock market outperformance of the world. Now there's a good potential that that's going to peak. And I see nuances similar to George W. Bush when he was elected in 2000, when the dollar peaked and we had a pretty good rally in commodities. The problem I see is we all know what's happening in crude oil. It's a paradigm shift. If we get higher prices, more supply is going to come on. And just certainly in this country, which used to be the demand leader, demand is just the elasticity of demand is just not there anymore. So I look at what's really attracting me as a trader is agriculture. There's, you're getting some 2 and 3 year highs in wheat and corn and soybeans. And a lot of that's dollar driven because they're traded in the US, they're priced in the US, so US exports matter. And then metals like copper is doing well, hovering just around $7,000 a ton. It's breaking out despite we're getting this weakness in the stock market. And the problem is I have to mention that because we've had such a high correlation to stocks. So I'm seeing a potential for a little bit of divergent commodity strength to kind of get away from, more the flow towards the physical assets, most notably metals, away from the financials. And we should have more definitive direction on that in the next few months. And yesterday was good examples. Like you look at gold and cryptocurrencies and copper, they were doing well. They were up despite the fact the stock market went down. So we need more days like yesterday.
Mike, the stimulus package 2.0 just seems like, I don't know, the gremlin that won't die, a Groundhog Day. It just keeps coming back into the headlines. What's your analysis on that now? I mean, last time we talked, you sort of observed that the Democrats were doing a good job with creating the perception of a deal was still alive.
They did a really good job so far of dragging that president along and making him think he can get stimulus before election and making sure it didn't happen. So for the Democrats to get elected, they need the worst economic situation as possible. I'm not saying it's bad or good. It's just the fact. You don't reelect an incumbent when economy is going down or looking bad. And their focus to get it done after the election has been very impressive. So I think that's going to happen. And I think we're going to be more likely to get much more stimulus. The problem is we know stimulus is short term. You know, it might help the market in near term. It might help the stocks. It might show a little bid for commodities. But the big picture is really what matters. And I think that's what's going to really play out over the next year. But I think we're going to get it after the election. I think it's going to be more than expected. And people are going to say, yeah, this is great. And then they're going to realize, oh, we're still in a global economic decline, and it's just going to take time.
And Peter, on that point, you know, from the point of view of the dollar that Mike referenced, obviously the dollar strength is pretty important for Asia. It's on a weaker run is good for Asia. Weaker dollar, weaker oil price, happy days for Asia. Where do you see the scenario that Mike articulated there for the election playing out towards the dollar and its consequence for Asia?
Yeah, well, I think first off, Sean, I want to see who's in power, and then we're only 2 weeks away, and how long that transition actually takes to declare a winner. So I think there's going to be a very tumultuous time after the 3rd of November. I think probably for a week or two, and I think that could be quite a volatile period as far as dollar. If Trump's in, I feel in some ways you might see that US dollar index, you know, creep down to that 92, 92 and a half. Biden, I'm not sure what happens. You know, it's.
Is there a way to sort of kind of universally declare that Asia would be better off with, you know, with winner X or winner Y?
Gee, I think that's a hard one because there's many moving parts to that, not just a currency, but then you're looking at trade. You're looking at where Trump's agenda is as far as manufacturing. Biden, I think there's so many components to that. South China Sea, where do the Philippines play? Asia is such a hot spot at the moment, and everything is going to hinge, I think, on the next month and a half till we've got a result, and then what the next 4 years look like, Sean.
We had a story in the Digest yesterday, which was about how Vietnamese Americans are overwhelmingly in favor of Trump because of their concerns of an overreaching China.
Yeah, that'd be very true. I think the Filipinos are probably very similar in their mindset. I'm not sure what Kevin's thoughts are as far as Singapore, but yeah, there's a great component of that. Japanese Americans as well. So everyone across that whole Asia basin has got that mindset. I would say probably maybe the Indian Americans maybe having the same mindset there again.
Yeah, that's similar, even though Kamala Harris is half Indian. So it'd be interesting, although they're not a huge number of people, big enough in certain places. Kevin, coming back to where we started, and I know Singapore is a very neutral place. I won't ask you to comment who they support in the election. But back to OPEC,
safe ground.
Did you come away from the meeting yesterday with any further clarity that you'd put your $10 on 7 red or 7 black vis-a-vis where the 2 million barrel increase in January is going to go?
I think both Peter and Mike have made the point, and I can only reiterate that, you know, there wasn't really much to take from it. There really wasn't any direction that we haven't seen before. You know, it's not an attractive game at the moment, as the other two guys have said, and therefore to say, right, I think it's going to 45 or I think it's going to 40. Yeah, it's in that range, but exactly where is very hard to say. I mean, yeah, I don't think.
But putting that aside, where price is going, we're talking about supply and the ability of the market to absorb a 2 million barrel a day increase. I'm wondering, do you draw any further clarity, or are you have less clarity? Because certainly going into the meeting, a lot of market analysts was indicating they need to check this.
Yeah, I think the simple answer to that is if there was any more supply on the market, then we would see a significant impact on price. The only real reason that we're at 42 and 50 cents or whatever it is on Brent is because of the amount of oil that OPEC has taken off the market. So if that supply changes, then obviously we're going to change price range.
Mike, your thoughts on that?
That's the overall issue with, like, I look at natural gas. It doesn't have OPEC. It has a natural rebalancing system due to price. And that to me is part of the big picture here problem with OPEC. It's just a dying organization. I mean, they're being replaced by technology. I look at 10 years ago, they were almost 40% of global market. Now they're dropping their 25%. Where's that trend going? And we all know what's happened. They need to supply more. They need to bring it on. It's the big picture. Where do we got 10 years from now? We're all going to have EVs and we're just not going to need as much oil. So big picture to me is
get as much out of the ground now as you can.
Well, and exactly. Well, and also I'm like from Peter, I want to be attracted by trade, and commodity guys love to be bullish, and I see bullish signs in ags and metals, and I just don't see it in crude oil. And I think most people are thinking from a trader standpoint, if we can get near 50, I can't wait to sell. And if we can get there near 30, maybe I'll buy. But here we're kind of, we're stuck.
These are uninvestable markets in a way, Peter, is ultimately the tone. And one would say that's with equities too.
Sean, I'll go one step further and building on what Mike and Kevin said. And I've just been listening, and maybe, just maybe, the boom days and the great days of crude trading may be behind us. And I know that's very bold to say that. I've been trading this market. I used to go to the NYMEX in '87. So I'd fly in from Sydney. So I've been around this for a few years. Maybe we're in that demand destruction mentality. Maybe the electric vehicles, maybe there's too many moving parts there that we never see crude above $70 again. We never see it above 80.
But that wouldn't remove the possibility of the trading opportunity. I mean, ultimately, if we did move the market away from controlled supply to elevate price strategy and moved it to a all free for all, pump as much as you can strategy, you'd see a lot of volatility in the market and you'd see a lot of opportunities to trade, I'd suspect.
Yeah, that may be true. And I think if you could pump as much as you wanted, I don't think we'd be seeing 60 and $70 a barrel.
Yeah.
I think we might be seeing 15 to $25 a barrel. But that's another story again. But I just feel as though that heats out of it. We're living through the COVID era now, and my mindset needs to be readjusted to the current.
Clearly, OPEC Plus decided yesterday that they weren't going to give any strong signals as to what's going to happen in January. Do you, Peter, see anything between now and their final meeting moment, which I think is December 1st, i.e. the next 6 weeks, that would sort of guide them more accurately to what to do in January?
Yeah, I think first off, where are we with COVID numbers sweeping across Europe and the UK and other parts of the world? So those headline numbers, if they build, significantly between now and over the next month, and where are we with the US election? Get those two matters. Let's see where they are, and then OPEC can take a better view leading into Christmas, leading into January and February.
Okay, let's go to the survey question before we have final word from everybody. Following OPEC meeting yesterday, what is your outlook for the scheduled 2 million barrel per day supply boost on January 1st? I.e., what is your recommendation? Should OPEC move ahead as planned? Should they postpone their hike for 3 or more months? Or should they phase it in incrementally from January over a few months into 21? What is your diagnosis, advice to OPEC, which of these three strategies to take, 1, 2, or 3? I will move to the days ahead. Mike, where is this election going? You've been calling it, and the general analysis is blue sweep. I myself am a little bit nervous to even utter those words. But what's it feel like on the ground today? Big debate. I think it's tomorrow or the next day. What's it feel like to you at this point in time? And just as a reference, the Supreme Court judgment on Pennsylvania overnight, I thought was noteworthy.
Yes, Pennsylvania is a big swing state. I look at it as typically what happens here is you have one extreme switches back to the next, and it usually moderates in the midterms. So we had a very extreme period of republicanism. We had the midterms that pushed back a little bit. Now we're at the main election. We're going to push towards more democratic leadership, and then more for the midterms, push back in the middle. It's just been the cycle. And then you just look at what's going on right now. It's very unlikely that this person who's in president has increased his base. Yet we have a much more moderate candidate versus last time the candidate was kind of unique. And that's I just sense that we're going to have the Democratic sweep now, and then people will push back in 2 years from now. So I see Democratic sweep. I see massive clean energy focus. I see big fiscal stimulus. I see a weaker dollar and an underperforming stock market, which is big picture is probably bad for crude oil prices, but probably better for most other commodities.
Kevin, your thoughts of what to be watching for the rest of this week?
Very interesting one. Still looking, just looking at stats in the US, looking at inventories. Chinese inventories have started to draw after building for so long. So that's also becoming kind of interesting. Chinese imports are still at relatively high levels. So that all implies to me that, refinery runs are up. And if that's
the outlook
the case,
for that China buying, you think is positive upward towards the end of the year for delivery into the new year?
Yeah, I think it is. I think, if we're starting to see this demand recovery, Chinese domestic flights, for example, recovering to pre-COVID levels, meaning there's now a home for jet fuel within the region somewhere, and other factors as well around driving in the big cities, then yeah, the Chinese demand is starting to come back. So Chinese refineries will run, they'll see decent margins, and therefore they'll continue to buy crude. And I think that's probably what we're going to see in the next few months.
Singapore is the kind of global or the South Asia hub, if you like, from the point of view of travel. How is activity at Singapore Airport? Is it still dead or is it coming back?
It's fantastic. If you want to go to Singapore Airport now, you can go and get on a plane and you can have your lunch there and sit for 3 hours and watch something on Chris World Entertainment System. Unfortunately, the plane won't actually leave the ground, and after 3 hours, you'll be asked to leave. But otherwise, there's not much going on at Changi.
You have to be, as they say in the business, a real anorak to do that.
And yet they're sold out. Every seat is sold out. Yeah, and if I remember rightly, I think lunch per person in first class is something like $688 or something of that ilk, which is not small beer. But in economy, it's only $50.
There's no hope. There mustn't be much going on in Singapore if one has to go spend $600.
We can't leave. We're gone stir crazy. We can't leave. We've got literal cabin fever.
Where's your beard? You got to get that cabin. It's time to get the COVID beard back. It's like Peter's doing a
Your comments to me last time put me off.
Let's go to the survey result before Peter gets the last word today and see what the view in the room is. So, postpone the hike for 3 or more months is the 50% view. Phase in incrementally 31%, or move ahead as planned 19%. That's a lot more 19 than I would have thought in this room, but nonetheless 19. Peter, your outlook for the rest of the week?
I've just had a look. It's a very choppy day as far as what we've seen in Asia trade today, Sean. The market is the market. Where are we as far as US equities over the next couple of days? Does this tail off that we saw last night, yesterday in New York, continue in the next trading session? President Trump, what's happening with Brexit? Just, very much front and center, right? Your eyes don't leave the screen. It just, you just take on board the news. And where does the US dollar play? I think that's where most traders are at the moment. My mind isn't on crude. I see gold as possible a breakout. But yeah, I think that's where a lot of traders are looking at the moment.
What about, Peter, just as a last comment, lockdowns in Europe? It seems to be kind of, people are flying over it as whether it's significant or not. I mean, UK, France, Germany, Italy, 4 of the G7 economies, all in progressive stages of lockdown, heading towards, something akin to a complete. How do you see that? How do you trade it?
I look at that as far as demand destruction. I look at that as far as a softness for crude over the next November, December. That's what gives me the mindset where I move forward from OPEC and where they are in January. I think there's a lot of push to the downside for a lot of markets at the moment. I think the euro is going to come under pressure. So yeah, I'm just looking at currencies, stock indexes, and certainly now might be the time to load up on gold.
Gold, yeah. Yeah, better go down to the gold souk here. It was just announced yesterday, was on this program, obviously, that you can have meetings of 200 people for a wedding in Dubai if you want. So if you want to get married, come to Dubai.
I'm over tomorrow.
You can have 4 wives here, of course, so you get married 4 times and have multiple parties. But we have our interview this week with 2 leading actors in the Fujairah storage business, the head of the Port of Fujairah and the head of Horizon Terminals, that's Enoch Ports in Fujairah, all about storage. And it's also the 1-year anniversary of our Fujairah newsletter. So we'll get a good update and insight from the guys who are running the Fujairah infrastructure for oil and oil storage. Thanks, Peter. Thanks, Kevin. Thanks, Mike. All the best. Catch up with you later in the week.